Um, Let me try this. Steve says it's getting better now. Okay, good. I'm going to try it in this level and see if that helps at all. Okay, I'm going to keep going, but it should be better now. Okay. Okay, Robert says yes, good. Stefan says yes, good. Okay. We'll try it on this level then. Okay. So where was I? All right, we were talking about how trading is hard work. Absolutely. Absolutely. Okay. Now, significant news is released publicly. Good. Thank you, Davina. Thank you. Okay, good. Significant news is released publicly so that, at least in theory, everyone in the world receives the same news at the same time. And that is true. And these news events that happen every single day can have huge impacts on the movement of the market. And we're going to take a look at that, a live example here that happened just this morning. Now, the foreign exchange market operates 24 hours per day. And that's a great thing, a great thing. So it's basically open 5.5 days a week. The only time it's closed is from 4 p.m. Eastern Time on Friday to 3 p.m. Eastern Time on Sunday. That's the only time it's closed. So basically a day and a half there, it's closed. But other than that, it's open 24 hours a day, which makes it very flexible. So you have, if you want to trade before you go to work, or trade when you get home from work, or if you're a night owl and want to trade at midnight, there's always trading opportunities for you. Okay, let's come on down to the next slide. Within that 24-hour period, everyone, there's 4 distinct sessions, as you see there on your screen. We have the London session, the New York session, which rolls over to the Sydney session, which rolls over to the Tokyo session, and back around to London. So you will hear Forex traders say, oh, I specialize, or I only trade the London session, or I like the New York session, or the Sydney session, or wherever they are, depending on their schedule, what they like to trade, where they are in the world, all those things. But it's 24 hours with those 4 distinct sessions in it. Now, that's why it's important to understand what session you're in, okay? Because usually the most trading activity happens either the first hour of one of the sessions or the ending hour of every session, or when the sessions overlap each other. For example, when London overlaps New York, or Sydney overlaps Tokyo, or Tokyo overlaps London. Now, don't get me wrong. There's plenty of trading opportunities throughout all 24 hours, but that's usually the biggest time, the busiest time, is when we have those overlaps, or the first hour, or the second hour, or the closing hour of each individual session. Okay, moving on. The time that was shown on that chart there was Eastern time, Stefan, and that's just a screenshot that I took a few days ago. So there's a great website, although it was down yesterday. There's a great website called Forex Market Hours. I'll type it in here. I'll type it into your chat box here. So I'll have to check it again today. I haven't had time, but forexmarkethours.com. Okay, I just typed it into your chat box there. So you should be able to go there if the website's back up, and it shows you exactly the chart you're seeing here. And you can input your own time zone and see what session you're in. All right, moving on. Now, let's talk about what currencies we focus on here at TPL Forex. We only trade the majors, the major currencies. For example, the US dollar, the euro, the Great British pound, the Japanese yen, Canadian dollar, the Swiss franc, the New Zealand dollar, and the Australian dollar. Now you see the symbols, they pretty much all make sense. The USD for US dollar, EUR for euro. The only one that's kind of really weird is the CHF. and that stands for Confederation Helvetica, which is Latin for Swiss Confederation. So that's where the C8 comes from. Okay, Frank is saying that Forex market hours are still down. Okay. I will find a different web page for you that shows you the different time zones for our next webinar on Tuesday. So people ask me, well, Craig, how come you only do the major pairs? Well, because we like to do relatively stable countries and relatively stable economies, because that's what works best with the strategies that we teach our private clients. We don't want a whole lot of volatility. And I'm not kidding you. It seems like every week I get a call from somebody asking about, hey, Craig, what about the Iraqi dinar? A lot of people are out there, especially a few years ago, pushing the Iraqi dinar as a currency to buy and hold. Well, my question to them is always, well, how stable is the Iraqi government? Well, not really. Not really stable in my opinion. So I don't trade that. I don't trade what's called the exotics. We focus on the majors. That's it. Now, stick with me here. This next part is very important, and we're going to talk about the structure of a currency pair here. This is very, very important. All right. If you have any questions at all, feel free to type them in. I want to make sure everybody gets this because it's very, very important. It's one of the most fundamental basics of technical analysis you need to understand. Okay. So what does a currency pair mean? Well, the quotation and pricing structure of the currencies traded in the Forex market. The value of a currency is determined by its comparison to another currency. For those of you who have traveled to different countries and you've exchanged US dollars for a different currency, you know that there's an exchange rate, okay? Now, the first currency of a currency pair is called the base currency. So, for example, if we have the Great British Pound versus the US dollar, the Great British Pound is listed first, so the GBP, and that would be what's known as the base currency, the base currency. The second currency in that pair is called the quote currency. Now, the currency pair, the exchange rate shows how much of the quote currency is needed to purchase 1 unit of the base currency. Let's go a little deeper on that. Here we have an example of what it looks like, what a currency pair would look like. For example, you see the Australian dollar versus the US dollar here. The Australian dollar versus the US dollar. So the Australian dollar is listed first, right here. The AUD is listed first. So that would be the base currency. And the base currency, as we just learned, is always equal to 1 unit of the base currency. So the base currency is always equal to 1. In this case, it'd be 1 Australian dollar. Now, the quote currency in this pair would be the US dollar, the USD. And what that means is this. So this price right here, this 0.9952, that price is the exchange rate. And what it tells us is that it takes 0.9952 of the US dollar to equal 1 Australian dollar. I'll say it again. So the AUD is our base currency. The base currency is always equal to 1 unit of that currency. In this case, the Australian dollar. So 1 Australian dollar. And the price, or the exchange rate, tells us how much of the second currency, the quote currency, in this case, the US dollar, how much of the US dollar it takes to equal 1 Australian dollar. So what this is saying basically is that it takes 99 cents US to equal 1 Australian dollar. Now, coming over here to the US dollar versus the Japanese yen, now the US dollar is listed first. So that means the US dollar is now the base currency. So that base currency is always equal to 1. So in this case, 1 US dollar. Now this price down here tells me that it takes 82.18 Japanese yen to equal 1 US dollar. And that's how exchange rates are generated right there. So the second currency listed is the quote currency. And the price or the exchange rate tells us how much of that second currency it takes to buy one of the first currency, the base currency. So if anybody didn't get that, please type it in and I'll be glad to go over it again. So now, okay, fine. Now we know what that exchange rate means. Great. How do we know if we're making or losing money? Well, that's where pips comes in. PIP, pips. And that's what we're after in the world of Forex. Okay, Davina says I'm a little confused. Okay, Davina, I'll go through pips and I'll go back to the base and the quote currency. Okay. But a pip stands for price interest point. Price interest point. Now, a pip represents the smallest increment of movement for the pairs. And it's always represented by the fifth digit of price. For example, going back to the Australian dollar, US dollar example here, so we count from 1, 2, 4, 5. Start counting from the number 2 here. So if this price increased by 5 pips, it would go 0.9952 to 0.9957. So we start counting our pips from the number 2 here. Davina, we are recording this, so hopefully the recording will play better for you. We send it to you after the webinar is done, okay? So I'm not sure everybody is still breaking up because I haven't gotten any messages. Okay, Stefan is saying a little bit of static again. Boy, I'm showing everything's fine on my end, so it may be an issue. Interesting. Okay. So, the US dollar versus the Japanese yen, it's still the fifth digit of price here. Okay. So 1, 2, 3, 4, 5. We still start counting from the fifth digit of price right here. Okay. So that's where we focus on when we're trading, because Frank is saying it sounds like loose mic connection. Interesting. Okay. Well, I am on a headset, but the headset is not loose. Interesting. Well, we'll make sure everybody gets the recording of this webinar because I'm not sure why it's happening, because on my end it's showing everything is strong and good. Okay, static is coming and going. Okay, Stefan. Okay. So once again, let's go back to the base versus the quote. On the Australian dollar, US dollar, the first currency listed is the base currency, and that's the Australian dollar. And the base is always equal to 1. Always equal to 1 unit of that currency. In this case, it's 1 Australian dollar. The second currency listed in the pair is the quote currency. And this price tells me how much of the quote currency it takes to buy one of the base. So in this case, it takes basically 99 cents US to equal 1 Australian dollar. Okay. Now, as the news comes out on different currency pairs, different currencies can get stronger or weaker based on the news. And I'll show you an example of that here in a couple of minutes. So for example, if the Australian dollar got good news and that currency strengthened, well, that means the US dollar is getting weaker versus the Australian dollar. And we would see this price go up because it's taking more American money to equal 1 Australian dollar now. Now, vice versa, if the Australian dollar gets weaker and the US dollar gets stronger, we would see a price decrease because it's taking less of US money to equal 1 Australian dollar. So, some of the benefits of trading in pairs is that you trade on economic strength. and economic news is always readily accessible. Now, here we have an example of how much a currency pair moves on average in one day. So here we have the euro, the USD, and it gives you the day. So Monday, that currency pair usually moves about 138 pips every Monday. On Tuesday, 160, and so on. So you see, these currency pairs, these majors, can give you lots of opportunities every single day to make pips. And what you do when you're trading is that you choose how much money you want to risk per 1 pip of movement. It could be 10 cents, it could be $1, it could be $10, or whatever amount you want to trade per pip. So this is where I dive in and I say, you have to have realistic goals. Again, trading is hard work and discipline and study. And I see so much nonsense out there saying, oh yeah, you can do 1,000 pips every single day. Use our system. Or you can do, 500 pips in one day. Well, it's just nonsense. Maybe 0.00001% of traders can achieve those results. My goal for all my clients is simply 20 pips per day. That's it. That is a manageable, realistic, sustainable goal. 20 pips per day. If you can average that, that is very good money. That's life-changing money. Because think about that. If you're risking $10 for every 1 pip of movement, and you can get 20 pips per day, guess what? That's $4,000 per month. That's more than the average American makes in a job somewhere. Now, obviously that's something you have to build up to, but that's a realistic goal. 20 pips per day is a realistic goal for someone who's first learning Forex and learns it, studies it, practices, works hard. 20 pips per day is a realistic goal to achieve on a consistent basis. And that's what we strive for every single day to help our clients meet those goals. Okay. Let's talk about what happened today in the news. Now, what happened today? This is a fantastic website that everybody needs to be aware of. I'll type it in here. And it's forexfactory.com. forexfactory.com. This is where we take all of our students to find out all those happenings, all the economic indicators and the news and the speeches and all the statistics, everything that's released every single day that can move the market and also affect your wallet or purse every single day. Because if you've ever watched the news and it just never made sense to you when they're talking about trade balances and unemployment rates and job growth and inflation and interest rates, now it will all make sense to you. And you will understand exactly what's happening, why things are happening, and how you can take advantage of it as a trader and as an individual consumer. So this morning, we had a lot of high impact news come out. At 6:30 a.m. Mountain Time, we had some high impact news for the Canadian dollar. They released their core CPI numbers. On the US dollar, they released their CPI and core CPI numbers and the unemployment claims. All right, let's dig a little deeper here. The first question I usually get is, Craig, what's the difference between CPI and core CPI? Well, all we have to do is click on this little folder right here, and it tells me exactly what it is. CPI stands for Consumer Price Index, and it's the change in the price of goods and services purchased by consumers nationwide. It's the average price of various goods and services that are sampled and then compared to the previous sampling. And this number is released every single month. Every single month. Now, the core CPI is a little bit different. It's familiar. It's kind of the same, but a little bit different. The core CPI does the same thing, but it excludes food and energy costs. Why? Consumer prices account for a majority of overall inflation. Inflation is important to a currency valuation because rising prices lead to the central bank to raise interest rates out of respect for their inflation containment mandate. Now, that's probably Greek to some of you, but after just a little while with us in private coaching, you will understand exactly what that means. Now, the reason why core CPI excludes food and energy prices because they tend to be very volatile and distort their underlying trend. So the Federal Reserve, which is our central bank here in the US, usually pays the most attention to the core CPI numbers, and so do traders. So, of the CPI and core CPI, the core CPI is the more important. They're both important, but the core CPI is tracked more than the CPI. And then, of course, we had unemployment claims, and that's pretty straightforward. So, how many people last month filed for unemployment claims? Now, if you come over here to the right side, you see the numbers. You see the numbers. On unemployment claims, they were expecting to see only 288,000 people in January who applied for unemployment claims. Well, at 6:30 this morning, this number here, this 313,000 popped in. Now, this number is in red because it's more than they were expecting. So they had more people filing for unemployment claims in January than was expected. That number's in red, which means that it was bad for the US dollar. But the core CPI number, they were expecting a 0.1% growth, but they came in at 0.2 at 6:30 this morning. And it popped right in here on this side at 6:30, so we knew exactly when it happened. We saw the number, did it meet, fall short, or exceed the forecast, and we were able to trade accordingly. So the core CPI is very, very, very important. So we had a little bit of a mixed bag, didn't we? We had negative unemployment claims, a negative CPI, but a positive core CPI. And look what happened in the market. Now, do not try to read any of the numbers here. We know the chart's too small for you to read it. Just look at the big moves that happened today. Huge, huge moves. This is the euro versus the US dollar currency pair. And right here is when 6:30 happened this morning. So this big move down here, big, huge move down. We're talking about 150 pip move. And this move down here is indicative of the US dollar getting stronger and the euro getting weaker. And if you don't understand that, that's okay. Just know this big move down is the US dollar getting stronger and the euro getting weaker. And that big move all happened just from understanding those numbers released this morning. So even though we had slightly negative news on the unemployment rate, unemployment claims, I should say, we had positive news on the core CPI, and that led to a big, strong rally for the US dollar today. Now, this is the euro versus the US dollar, and this is the Great British pound versus the US dollar. Very similar, isn't it? Big move down, and again, this is the US dollar getting stronger and the Great British pound getting weaker. If I look at the US dollar versus the Japanese yen, you'll see the reverse. Now, this move up is now indicative of the US dollar getting stronger and the Japanese yen getting weaker. Again, all at the same time, the exact same time that news was released this morning. I'll show you one more. This is the Australian dollar versus the US dollar. Again, big, huge move down, the US dollar getting stronger, the Australian dollar getting weaker, right at 6:30 a.m. this morning. And this was a trade that we did live with our students. So yes, not only do you get the coaching and the training and the homework and the discipline, you then get to watch our coaches trade live with real money on real accounts, not fake money. So they're putting their money where their mouths are. So you get to watch over their shoulders live as they call out the trades, call out the target profits, call out the stop losses, and you get to trade alongside of them and learn by watching a professional person who's been trading for a long time. All right? So that's invaluable. So someone that's always going to be there holding your hand and stepping you through how to do proper trading. Now, we're never going to say that our trades are always 100% successful. They're not. There's no trader out there that is. If you ever hear that, please run, don't walk the other way, because they're lying to you. Our methods, our goals for our students is to get to right around an 80 to 85% win ratio. If you can do that consistently, you will be a very happy trader with a great chance to make life improving or life changing money. And that's our goal for every student that we work with. I know everybody says this, especially in a sales webinar that you're in right now, but we treat our clients like gold. We talk to them every single day. We work with them. We have our private sessions. We have our coaching sessions. We have our webinars like tonight. We have impromptu trading sessions when there's big news. We bend over backwards for our clients because we care about them and hopefully their financial success. We can't ever guarantee it, but we work our butts off every single day to help them achieve their goals. Whew. My apologies for the on and off again static. I'm not sure what was happening there. We do use GoToMeeting, which is the industry standard, the best there is out there. So I'm not sure why that is, but I will do a this webinar on Tuesday. But again, this webinar was recorded, so we will have this up and on YouTube as soon as possible. So I'll make sure that Topher and our staff here at TPL Forex gets that up there for you, and make sure you all get that link to go out there and watch it. So, whew, boy, that 35 minutes flew past. I hope you learned something tonight. I hope you saw the power of understanding the news events, understanding the currency pairs, understanding the proper tools to use to give you the best chance for highly probable trades. And please, I really encourage you all, take action to increase your knowledge, increase your education base, and take matters into your own hands. We don't want to see you stay in that 4% stay in that 96% who retire dependent on family, charity, or the government. You came here for a reason tonight. I hope you learned something, and we just scratched the very tippy-top surface of what we have to teach you here at TPL Forex. We have in-depth sessions, in-depth materials that teach our students the real way to trade, and we work with them day to day. We hope you join us. We thank you for your time tonight. We know you have many things to do on an evening, but we thank you for being here to expand your knowledge base. Hopefully you learned something, and we'll see you again in the future, and we'll see you as a private client. So I am going to end the webinar now. I'm going to stop showing my screen, but I will be on. Topher saying if you've been on at least 3 of these and not had a follow-up call from Topher, please send him a private message. Do so right now. I will keep the webinar up, but I'm going to take a quick break here and come back in about 5 minutes. If you have any questions, I'll answer them then, and then we'll end the webinar. So have a great evening, and we'll talk to you soon. All right, everyone. I don't see any more questions, so thank you. I'm going to go ahead and end the recording here.